Good morning, everyone. This is Leslie Jouflas with Trading Live Online, and welcome back to your Daily 5 and Happy New Year to everybody. Well, the markets are started off with sort of a bang at the beginning of this year, and I'm going to walk through some of these some of the charts. We're going to focus on the indexes today because if you get a handle on the indexes, you can always scale down from there to sectors and individual stocks. So we're going to look at the S&P 500 on a couple of time frames. We're going to look at the Nasdaq and the Dow Jones Industrials. Okay, we're going to start here with the S&P 500. This is the futures chart. You can use the SPY or the SPX and easily follow along with this. But I wanted to start with the weekly because here we can clearly see where those March 2020 lows were and this uptrend that has been persistent since then. So we have this long-term uptrend. And this is always a little bit difficult to draw a trend line from these lows because this was such a steep ascent here. But I'm using a trend line from this point and just forward. There's a couple of other places, but this is the one I want to focus on today. So we can see that there's been a succession of higher highs and higher lows, and we can define an uptrend with that. But if we take a look back here, again, this is a weekly chart, then we can see that there's sort of a lot of, the bears have control, the bulls have control, the bears, the bulls, the bears. There's been a lot of back and forth going on that we can see with these candle bars here. And so I just wanted to point that out, that this is something that we really haven't seen a lot of. And if we look over here, notice these areas where we have the closes, the opens, the closes, the opens. Here we have an open here. A lot of this is happening right around that 4,700 level. So that is going to be a point of resistance if the market is able to make it back up there. So let's take a look now at a few other charts. Let's scale down. First of all, let's take a quick, I changed my mind really quick. I want to look quickly at the other indexes, the NASDAQ, just to show you the type of patterns that they're in. So the NASDAQ is in a range. It had this A, B, C, D sell pattern up here at the top. Yesterday, it came down below this lower trend line, but it did pop back up and it's just sort of hanging there. The RSI has been showing weakness and the money flow has also been showing weakness. This dash line, this is the center of this range. If there is a rally back up, I would expect resistance right in that area. However, if these lows break, and especially the low from yesterday right here, then that's going to be a sign of further weakness to come. And looking at the Dow Jones Industrial on a daily chart, I'm using the Emini. This is a butterfly sell pattern. These are known as reversal patterns, and I'll walk you through that real quick if you're not familiar with them. But we have the X point of this swing down, and then that starts the A, B, C, and D. The D is the completion point on here, taking the length of the X to A in a fib ratio that extends above this point. So when we have an ABCD pattern that extends above a previous swing point or below, if it's a buy pattern, that's a butterfly pattern. Now, something interesting to note here, where this red arrow is here, this is where the market, the Dow Jones was struggling to get up to new highs here, new all-time highs. You can see all the attempts here, and it pulled back. It formed, sort of a range pattern that had a objective that hit the objective once it came up to new highs, and then just backed off again from there, and then formed this butterfly sell pattern. And you can see where the lows were yesterday on a decline. You can see that that is right at those previous highs. So I think this is going to be an important support area to be watching on the Dow Jones Industrial. Okay, so now from there, I'd like to scale down. We looked at the weekly of the S&P. Now look at the daily chart. And yeah, you guys, some of you guys may have seen this before, but this is a parallel channel chart of the S&P, the E-mini futures on a daily chart. And here we can see the A, B, C, D sell pattern. And there was a lot of trading, you know, back and forth, back and forth, back and forth. And then it dropped beginning of the year, dropped down, broke this trend line here and found, you know, some support right around this trend line. Well, I have this little red line marked on here. These were the lows from yesterday, 45.72. And because of the nature of the formation of this type of candle right here, these lows are important. This can become a reversal signal if the market comes down and takes out these lows. And you can see this other dash trend line right here. That's right around the 45, 60-ish, 50-ish area, depending on the trajectory down. So that's going to be a very important support level to see if the market holds. And again, we can see the RSI not showing a lot of strength here and still turning to the downside. So let's scale down now to another time frame. I want to go to a 60-minute time frame, so we can see a little bit more detail on the 60-minute time frame here. Here's the A, B, C, D pattern. And there's also something I want to show you with the symmetry of the A, B, and C, D legs. So I'm going to show you just a little trick to find the symmetry on that. But for now, let's do a little bit of analysis of using the intraday chart. So here, this 45.72, these are the lows from yesterday. After this decline, we had, you know, close to a 250 point decline off of the highs of that ABCD sell pattern. Now the market had a rally up to the 0.382 retracement. Generally, when you have steep declines, generally the 382 and the 0.50 are going to be the areas the market will retrace to. If they suddenly come up through those and higher than that to a 618 or 786, then it's not as bearish as it looks. The Globex retracement was 46.88, so it was just about right on to that 0.50. So again, watching that 45.70 area is going to be important. Now, the RSI, let's look at the RSI down here. The RSI yesterday got to a low that it hasn't been to in a long time. It's just about 16.5 on the RSI. And so it changed up here from the bullish down to a bearish range, and so far has just retraced back up to about the 46 area on the RSI. Now, if there's further movement with price to the upside, the RSI may get up to around the 60-ish, maybe 65 area, but it's still going to be a bearish. So I'd be looking to sell rallies still on here. So now let me show you a little trick with this pattern when you're working with these patterns. Oh, one more thing, I almost forgot. Back here, this FOMC that's here, this was a price level from a FOMC meeting back from November that the market had a strong move to the upside from, and there's a dashed line from it. Look how many times that the prices have traded around that price level. And even yesterday, you can see that the bar here got up through that. That's about the 46, 11, 12 area. So I think that's going to be a price level to watch as well. Okay, so let me show you a little trick with this pattern. So you can see the slope and angle from this line on the A to B. Notice the prices on the C to D. Notice how when they come up to the completion point right here, notice how much steeper that angle is. Well, sometimes you can find where the completion area is by using some time. And a simple way to do that is just, I'm drawing down from the high of the B point here, and I'm going to, from the start of the A point, I'm just going to come over with a horizontal line to meet that, that represents the time that it took the AB leg to form. Now, I'm going to simply drop that over. So this is the approximate time that this pattern, so you see how much further the time goes on here. But one more thing, we can also use some Fibonacci ratios on here. So if I'm from the point C up here, if I do a little fib retracement here, whoops, right to the 1.0, I'm going to have to expand this out a little bit more so we can see. You see right here with the 127. So what that represents is the length of time that we cloned. So if that's our 1.0 of time, then the time extended to the 1.27 fib ratio before this large drop happened. So if you're studying these patterns, I know I've had a lot of you guys come in and start to study these patterns on my website, then here's a little trick using some time analysis when you have a steep CD leg. Okay, so those are the areas that I'm watching, and I do think we're starting to see some long-term weakness showing in the weekly charts. The daily charts have already shown us with this drop. Even if we do rally up further, I think we're just going to see more divergences. So you might want to start looking in your portfolios and taking the appropriate actions from there. So once again, I'm Leslie Jouflas with Trading Live Online, and I'll talk to you on the next Your Daily 5.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.